Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, over the last 15 years, we've tested 64 different trading courses and we have put the most powerful systems and trading techniques that we've discovered in this brand new trading course. And for a limited time, I'm giving away free access. So go to johnsfreegift.com. That's johnsfreegift.com or click on the very first link in the description to get free access to this brand new trading course right now. Alrighty traders, so in this video I want to cover why it's so important that when you are trading these markets that you focus on what is happening right now as it speaks. Okay, a lot of people can put the worst thing that we can do as a trader is have a biased view looking at the market. And what I mean by that is that if we think all this news we've been listening to is really, really bullish for the markets, then we're going to find whatever we can to find bullish things on the markets and why it's going to go up and it's going to keep going up forever and ever and ever and ever and ever and ever. Okay? Or we can listen to the flip side of why there's so much debt and we're going to have a recession and this thing can't keep going up, which we know the market can go up a lot longer than what people think, right? What's the terminology for that, guys? Put a comment in below. What's that terminology? The market can stay rational more than you can stay liquid or something like that. Yeah. So anyway, so the reason why I'm saying that, and the reason why I'm bringing this to you is because a lot of people they bring their biased view on news to what is happening right now in the markets. So yes, we may have some fundamental news. We may have a lot of debt in place. We may have a lot of things in place. But that may take 6 months, 12 months, maybe 2 years to start to really unfold underneath the surface, right? Because that's a fundamental. Fundamentals take time for things to happen. So if you think there's a recession around the corner, it doesn't mean that we're going to start to see a crash tomorrow. Right? Yes, there's really, really bad news and blah, 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 all that sort of stuff. Or if you believe that, okay? And the reason I'm saying that is that the reason why you look at this as from a logical point of view. If you've watched The Big Short, okay, then when did Michael Burry start to recognize that there was a really, 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 really bad, a lot of cracks in the housing market? When was it? I think it was 2005, probably at the latest 2006, right? And as you heard him through, and if you watch the movie, you'll be able to, if you remember, he'll actually say in 2007, the adjustable rate mortgages, blah, 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 are going to start to kick in. And that's when these defaults going to happen and all that sort of stuff, right? So, but when did the recession actually start? It peaked. The stock market peaked in the middle of 2007. Okay, it peaked in the middle of 2007, but we weren't actually in a bear market to like the first, actually, you know what? Instead of me just doing that, let me just bring up a chart and let me see if I can, let me go back to, actually, you know what? Let me go back to an 8-day. All right, there we go there, right? So I'm going to bring this back here. So, and the reason why I'm bringing this to you guys is because we want to throw our logic, what we actually think, what we actually hope or whatever at the window and look at facts for what it really is, okay? Especially if you're a trader of these markets, guys, if you're a trader of these markets where you trade the markets, then the most important thing is, my phone is going crazy right now. The most important thing, right, is to trade what you see. Do not trade a fundamental. How can you trade a fundamental? Trade in the markets, which means you're getting in and getting out, right, on a short-term basis. Don't trade. That's not a fun. Don't trade fundamentals, right? So as you can see, right, look at this here. When did Michael Burry start to recognize the cracks in the housing market? Here, right, 2005, 2006. But as you can see, right, this is when he started to see the cracks in the market. But what happened for another 12 months as he started recognizing the cracks afterwards? We went for a big run. The purpose of me saying that, guys, is that if you're trying to use logic and reason of why we are going to go, well, we're going to go see a big bear market. I know there's a lot of people out there who are continually say, get out of the stock market, get into silver and gold, because that's it. By the way, I do believe we're in a big bull market in silver and gold, and we're just seeing a nice healthy pullback right now. Okay. But with the stock market, no, that's the opposite, right? It's like we could be going for another 12-month run up into the elections next year. Don't say it can't, because I'm using a statistical thing of something really, really big in the markets. And then guess what happened? When did we actually start the bear market? We made a what? We made a top, low, lower high, breaking past previous lows. So it was actually in the middle. This was actually the middle of 2008 that we actually really started the bear market. Right? Went down a little bit, so on and so forth, right? And as you can see, this is the middle of 2007 was the peak, and then we started to roll over. What did we make? Made a high, a lower low, a lower high, breaking of the lows. So focus on the charts. Focus on the charts. If the market's going up in an uptrend, higher highs, higher lows, uptrend, lower lows, lower highs, uptrend. High low, high low, high low, high low, high low, high low. Oh, what's that? Oh, the market is still rising prices. Then we made what? Then we made a lower low, lower high, breaking past previous lows. Who's in control here right now? The sellers. No doubt about it, right? We're now in a bear market. We're now in a downtrend. And then, oh my goodness, blah, 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 blah. And then we started it, okay? The purpose of me saying that, guys, is throw your thoughts out the window and focus on what the market is telling you. The market is always telling you what's going on, and it's something simple as higher highs and higher lows. I know that sounds pretty crazy, but yes, if the fundamental is going to kick into play, the chart will start to give you a bit of a warning sign or a bit of a sign that we're now that fundamental is now starting to kick in. But if you're focusing everything based on debt and all that sort of stuff, then it's gonna be a really, really, really hard place for you, because like just what I said before, right? 2005, 2006, that's when Michael Burry started recognizing the cracks in the mortgage and housing market. But guess what happened? We went for a 12-month big bull run again in the stock market before we peaked out. So if you're thinking right now that we cannot go for another big bull run, you've got to be open-minded to that. So what is the only thing that we can really focus on then? It's the market, right? It was like, I don't know what's going to happen, but I only can use the stock market. I only can use what's happening right now in the markets. If I go back to that weekly chart, what's happening right now to say what's going on. And what's going on right now as I speak, not what I think, not what I hope, not what I fear, right, is a higher low, higher low, higher low. And if we start to break these previous highs, we are likely, there's a very high probability, based on all this sideways movement, there's a very high probability that we're going to spend a significant time to the high side and probably hit 30,000 plus on the Dow. That's just because what the market's telling me, not because, I think it's going to top. A lot of people say, well, if it does break out, then it's going to be the last bit and then it rolls over. That may happen, right? But don't be making a decision based on what you think, right? Like that's the same back over here. Let me bring this over here for a minute. And I want to bring this, look at this over here, right? So this was actually during the election time, right? So let's look at this here. During the election time, what do we have here? We had a bottom, we had a lower high, then we came down, made a double bottom, didn't we? Then we came up, made a slight higher high. Then what ended up happening? Let's go to here. Look what happened. Then we came down, we made a higher low and break up. So who's in control here right now? What do we have here right now? Right, again, this is during the election time. Forget everything else. Forget, the market crash reports, blah, 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 blah. Focus, grasshopper. High, lower high, double bottom. The market's telling us, right? The market, not us. The market's always right. And then it made a high, and then it made a high low after all this sideways movement. What does that mean? Buyers in control, right? Then guess what happened? Then we broke up. And then we started to what? And then we started to go sideways. Look at that there. So as we're seeing this market right now, as we're I get excited, don't I? As we see this market right now, if you're going back to 2016, and if this is all you saw, forget all the reports, forget all the fundamentals, forget of why the market in debt and Brexit and this and that and fear mongering, blah 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 blah. Forget all it all. If you want to become a good trader, listen to the markets. What's going on right now? Remember, there's downtrend, lower highs, lower lows. There's uptrend, higher highs, higher lows. There's no one in control sideways. So when we have a high, lower high, double bottom, higher high, who's in control here? No one. Then guess what happens? We made a what? We made a higher low, breaking past previous highs. So who's in control here right now? As we started the what? Higher high, higher low, higher high. And now we're breaking down. Who's in control? The buyers. The buyers are in control, right? Now we're looking at the overall picture here. Now the problem that traders have is that they say, well, that doesn't guarantee anything. No, it's based on probability, right? It's based on probability because the trend can change at any time. And that's part of the markets, right? That's part of trading. If you don't like that, if you can't handle the market changing trend, then don't trade the markets because that's what it's all about. But right now, we're looking at probabilities, right? We're looking at probabilities. What's the trend going? This is the weekly chart, remember? Weekly. So remember, what are we looking at for? We're looking at, is the market going to boot? Is the market likely to take off? Or is the market likely to crash? Well, we went sideways, higher high, higher low, high high. And if we forget everything else, who's in control here right now? The buyers, right? Why? Because they're still making higher lows. This still could be some sort of higher low through here. Right, still going sideways, and I'm just moving more now. Now we just went through another month of time, right? Just like that, and we're going sideways. Who's in control here right now? The buyers. Why? Because we still have a low. This is still a higher low, and until we break this low here, we have not changed trend. Right? We have not changed trend. So we cannot be thinking anything else. So if you look at the election time, right, and then look, we have a red candle. It's going down. We've had what? How big is that candle? Oh my goodness, we've had 300-point down week. That's it. It's the start of the crash. It's get ready to go short, everyone. Get ready. Boom. What? Who's in control? Who's in control right now? If you're just looking at the market, listening to the market, and not what you think or what you hope, what you fear, higher low, higher high, higher low, breaking past previous highs, higher low, higher high, breaking past previous highs. So what is happening here right now? We get a nice big upward candle, breaking down. Isn't that interesting? We had all these small candles, then we had this small breakdown, get everyone short, and then bam. All right, the market takes off that week. So what is the market telling us right now? Who's in control? The buyers. So is there any reason for you to think that the market is going to crash here? Right? Is there any reason? No. Right? Oh, but the debt, John, you don't understand, and Donald Trump's in, he's gonna deliberately crash the market and all this thought story and blah 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 blah. Right? Don't do that. Do not do that to yourself. Okay? One of the worst things that I did is create story around something. No, remove your thought. You're not bullish, you're not bearish. You're a trader. You're listening to the market. Right now as I speak, there's this pull back here, and then then this big bar breaking out and breaking above these highs tells you we're in a bull market, we're in a bull trend. We went from a bull market back here to no one in control to now back to a bull market. The market's telling us that, right? And if the market does hold here and we start to break back below this low here, and the market does something like that, well, guess what? Now this was a false breakout, and now we can start to adjust. Make sense? That's what we have to do as a trader, because there's no certainties, right? There's only probabilities. But what is the probability here right now? The probability is what? That we're starting a new upward trend. Especially if you know how these markets work, especially once we've done all this sideways movement and now we're breaking up higher high, higher low, breaking past previous highs. After all this sideways movement, guess what? There's a probability now that we're likely to start to what? Oh, look at that move. Oh, isn't she just gorgeous, right? And then we started to see, the top's in, the top's in, the top's in, the top's in. And then it just, right? It just keeps going. We go for a big bull run. And then that's when we started to see the gyrations through here right now. So I bring you to present time. What is happening here right now? We are doing what? We're doing what? We're doing higher low, higher high, higher low, equal high. Still a higher low through here, right? So if we start to break up through here and we break up out of this here, after all this time, what can we expect from the markets? I wonder what. But John, this time's different. No. Throw your thoughts out the window. You're not smarter than the markets. Listen to the market. The market is telling you. Okay? That's why I titled this video, Big Breakout Coming. Big Breakout Coming. Because there's a very high probability based on what we're seeing here after all this time, it's just repeating itself. And just like I said in this video, that just because in 2005 and 2006, or Michael Burry started to notice the fundamental, right? The fundamental, like right now, the debt is too much big. We've been saying the debt is too big for 10 years, right? As long as they can monetize that debt, throw it all around, all that sort of stuff, it's not a problem now. Okay, the market will start to tell us. The market will start to tell us when we're starting to top out. Just like I shared with you in 2007. And just because there's a fundamental, just because there's a crack right now, does not mean when we can't go through another 12-month bull market. And then we top out. So the purpose of me saying this is, the purpose of me telling these guys is, I have no idea what's going to happen. So, and it's so important to not listen to these reports or fundamentals or anything like that, or white papers, or all that sort of stuff, because people are biased based on people think, right? So if you listen to certain people out there who are telling you to get out of the stock market and get into silver and gold, I can almost certainly 80% of those people who are saying that are probably selling gold. Whoopie-doo. You know what I mean? Like, what do I sell? I sell coaching. Why do I coach? Because I teach you things just like this. Which means the better being flexible and flowing and listening to the markets, having an unbiased view and say, market, okay, I have an unbiased view myself, but you tell me what's going on. And if the market is logically and factually making a higher high and making higher lows and squeezing up like we're just here right now, well, guess what? That's just history repeating itself, right? Just like we did in 2016. So who says we can't go for another big run? But if it does run up and then we top out and then we start to break down, well, guess what? If the market does run up, we go up through here and then we go sideways and then we start to break down below this low through here, what is that telling you? Then potentially this whole thing was then a top, right? Because we never know. And then if we come down, if we make some sort of lower high, breaking past previous lows, then this whole thing is probably likely to be the top, and then all of next year would then be what? A bear market likely to be. Make sense? So it's so important to just throw your thoughts out the window, guys, and look at what's happening. That's the reason why I see a big break coming. Not because I'm smarter than anyone else or I've got some secret sauce. You don't need to know the secret sauce. The secret sauce is the market. The market is the truth. As you can see, there's nothing on this here. It's not my stochastics or the elite wave or the VWAP or da-da-dee-dee. No, it's the market itself. So please, guys, please, for you guys that have whale of positions in these markets, just be careful. Actually, no. I'm not going to even say be careful. You're an idiot for doing that. If you have a whale of position because you're short in the market right now because you think it's going to be the top, don't. Listen to the market. The market's right. I don't know shit. The market always knows best. And listen to the market. The market's always given us some sort of warning sign. And I don't care what time you go back. I don't care if it's the 1987, the 1929, the 2008, the 2001, the 1987. Did I say 1987? Well, I just did. Whatever, right? Any period in time, the chart always gave us some warning signs that we're starting to top out. So please, guys, be smart. If you have a whale of position short right now, do not be surprised if you get totally decimated.